Hello and welcome to another Daily Dose of Insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence e-business. Today it's Monday, so first of all, welcome to the new week, and it's Macro Monday at DDOI. That means that we always look at the key macroeconomic themes that are happening and that will be published over the course of the week, to give you a little bit of a head start into what your week might look like. Let me quickly share my screen to give you a little bit more guidance. Before we start, a real quick recap. End of last week, there was a few headlines that came in. First off, Maersk had a press conference. Vincent de Klerk had a press conference warning of declining demand for container shipping. So actually increasing the decline with a -4% expectation versus previously a 2.5% expectation. And the reason for this, particularly due to weak economic growth and continued inventory reductions. So previously, the industry expected this to happen much quicker, inventory drawdown, so that retailers and wholesalers would order more and quickly. But that is not the case, and we continue to see inventories being drawn down, and hence seeing a negative impact on container shipping. And then the ILWU, so the union of the dock workers and terminal workers at the US West Coast, essentially ratified a 6-year contract, backdating that to July 2020, where the old contract expired. After 13 months of negotiations and on and off labor actions. So that's very good news for the US West Coast. And then a really quick outlook onto the rest of the week in terms of macroeconomic indicators. Tuesday and Wednesday, pretty interesting US factory orders and then German factory orders. Both of them now expect a decrease on a month-by-month basis versus the last month and versus a positive reading in the previous month. And you see here that US reacts much less sensitive than Germany right now. So we see a much sharper decline in Germany in terms of factory orders. And then you see that real quick, Euro area retail sales also expected to decrease while, and that I want to sort of jump to Friday, while actually inflation numbers show continuous stickiness. This is now the German number, but you can sort of look at that also from a European perspective, with Germany being the largest economy in the bloc. So inflation being relatively sticky at a very high level, and retail sales decreasing continued in line with previous month. So that's overall a very negative, very bleak picture for the euro area and of course Germany. And then lastly, on Thursday also we have used jobless claims for September coming in. Slight uptick, but only very marginal. So you could always say situation is very flat now. Cool. That's it from us for today. Thanks a lot for tuning in. Have a fantastic start into the week, and see you on Wednesday. Take care.